Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. Can I please get a screen and audio check in YouTube? Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. Can I please get a screen and audio check in? Thanks, Dan. Well, good morning, everybody. Thanks for visiting the Trader Lab. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord community, and that includes a lot of additional education: stocks, options, crypto, order flow with a high-tier tool like Bookmap, algorithmic behavior, market maker behavior, and a lot more. The key to market mechanics, in my opinion, is understanding how the market works, why it does what it does, how you can get in alignment with it. And in order to help traders do that and to develop an understanding of how the market works, I've shared 60 PDFs of structured trades as well as a library of webinars. And there is a community called the Trader Lab that you're all welcome to visit. That is a group of like-minded traders who've come together to leverage their collective experience. It doesn't matter how long you've been trading or even what you do. The key to this is, can you build a sustainable business? And the reality of trading is quite different than I think most of us think it is, especially when we're new in the business. Now, what do you call new? It doesn't mean 6 months. You could be working at this for 10 years and yet still be going in a direction that might not be sustainable. The problem I always experienced in my own personal development, and now that's 45 years of trading, is that we all have winners and we all think we're on to something. And yet, in reality, we only have a random distribution of outcomes, which we all have. But the problem is, do we actually have an edge that nets a positive outcome over a random distribution of interaction with the other participants? And all of us have winning trades. It doesn't really take any skill to have a winning trade. It does take skill and an edge in order to extract dollars more than you donate dollars to the other side. It's kind of common sense. And casinos really operate the same way. They only play games that have an edge. And they also pay the gamblers. So we have to pay, but it might make sense that if we are going to pay, that we extract more than we pay. Just a thought. So I understand, psychologically, nobody, quote, likes to lose. No, how can you, right? But let's step back a second. This is not about winning or losing. Casinos pay the gamblers. All businesses have overhead and costs of production. That is not what this is about. Yet, psychologically, that's something that we're trying to get to. Certainty, confirmation. It doesn't exist here. So how can you design a solution for something that doesn't exist? This is why the Trader Lab exists, to help you understand the reality of what this business is, how you might get in alignment with it, and also how you can build out a business model that you can kind of get your arms around so you can understand what is it you're trying to accomplish, what are the typical pitfalls that we all go through, and how can you build structure around those issues or elements and give you a better opportunity to manage them, because now you might understand them better. It isn't willpower, by the way. There's a lot of psychology involved in this business, and in the Trader Lab, we focus on all of that. And it's not about me. It's the community of the Trader Lab, that leverage that creates power, in my opinion. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room. My objective is to give you an understanding of how the market works and share structured trades with you that you can vet, as we say, reverse engineer and make them into your own. Now, a lot of traders developing traders think that this is kind of like a video game. How often can I click the mouse and all of that kind of thing? But that's great for the dopamine, and it's also great if you want to play a video game. But if you want to be in a business, I'm going to suspect or suggest, I would say, that you take a different approach to this. And that is, where does your edge lie? And only getting involved in the market and participating when that edge shows up. Now, we all see the rotations and the wiggles. And, when we see these things, we all get motivated. Oh, I want this and I want that. Now, I'm going to show you something. This is a higher time frame. This is Investor RT. And I want to talk about yesterday's trade because that was pretty interesting. If you remember yesterday, and I think in the stream, I can't remember, we were talking about our objectives, and that was to take out this low, previous days, the day before yesterday. Now, this is today, so let's ignore that for the moment. Take out these stops, so sell stops, and come down, and this was our target down below. It's called the naked volume point of control. We didn't get there, okay? And then we closed back inside of this range. That suggested the possibility. Now, there's always, the thing about trading is we don't know what's going to happen. So it's not a predictive business. It's really an alignment business. So the market goes up to go down, and the market goes down to go up. And being Friday, I was thinking today we would, at some point, get a squeeze. Now, will and from where and all that, nobody knows. However, now I'm going to share with you some hints about today's activity. And this is all called auction market theory. Auction market theory is a fancy term for shopping. So if you understand how to shop, you understand auction market theory. And that is, what's a fair price? The yellow line here represents the highest volume in yesterday's RTH. This yellow line back here represents the highest volume from the last time we were down here, August of 2024. That's a retail price. Well, we didn't get there. However, it's still open, and it's still, as we say, on the hit parade. So don't forget that level. There's a good chance we will be visiting it in the not too distant future. It's not a recommendation. It's just the way the market works. Now, let's come back to this. This is called a distribution, and this is called a micro composite volume profile. What it does is we are taking this consolidation, this high to this low, and we're bracketing the volume. And the idea of the auction is distributions of volume, and it rotates. You know rotations, right? Well, if we find a retail price or a high volume price, and this is your shopping experience, retail, where most of the volume is, if it's too high, we fall away from it. Then we start the process again, and this goes on and on and on and on. Auctioning or rotations. Well, when you put all these days together, you get a high volume area for this whole area. It's 5620 right there, the orange line. Yesterday's high volume going down in time frame or fractal was at 5540. Let's take a look at what that might mean and how can we use that information. Yesterday's retail price, what was that? 55.40. This was the price that everybody was willing to do business at. It's like you go into the store and retail and everybody does business, buyer and sellers, right? They agree. Well, in the ETH, we tested yesterday's highest volume. And what did we find out in the ETH? It was too low. There's the ETH low. There's the retail price. Oh, it's on sale. Well, guess what? Yesterday's sale is over, and the market moved away from it. That's the first suggestion that maybe that's too low. Well, if we find out what might be too low, and we test it in the ETH, that means that the buyers perceive this as a sale price. You know, you go to the store, it's on sale, you throw two in the cart. Same thing. Trading is no different than shopping. Now, let's go next concept. In the ETH, we have the same concept. the last auction in the ETH is called the overnight volume point of control. So it's ETH, same thing as this, naked volume point of control. Naked means it wasn't tested. Okay? It was tested in ETH, but it wasn't tested in RTH. So it's still on the hit parade at some point. ETH volume point of control is the last auction. If this is too low, follow the concept, because you'll gain a tremendous advantage, in my opinion, over other traders if you understand actually how the market works. The market is not based on your indicators. It's really based on the participant behavior. Indicators attempt to translate price or some derivative of price. The auction is not doing that. What the auction is doing, it's actually measuring volume, which is as close as you can get really to participant behavior. And then, of course, you have order flow, which really takes you down, you might say with the electron microscope, which also gives you edge. So if this is the retail price from the ETH, so too low, down below, retail here, then what? Well, if this now is too low, think shopping, if we come back to it and check it, we might have an opportunity to get long, and then we have statistics above. Let me share that with you. And now this is all before the market opens. ETH high. There's over a 90% probability we take out either the ETH high or low. I don't know about you. Considering what we did down below, over here, I'm inclined to think ETH high. So that puts longs on the hit parade. And there's one other little piece that you're going to find very exciting. Do you remember yesterday's high? We missed this target, a naked volume, same thing as below, naked volume point of control. Same thing as below. This was too high yesterday, and we missed it by a tick. I believe it was yesterday. I don't have that other. Hold on. 1 second. I just want to confirm this. Not yesterday, day before. Here, we one tick this day, which set up this down. So this is a weak high right here. One tick and buy stops are above here. Okay, so that sets up the possibility of going here. So we have this one here from yesterday, naked volume point of control. We missed it by one tick. Okay, I'm back in gear here. I got a little distracted. Missed it. Naked volume point of control. What's down here? Naked volume point of control. What's the ETH low? Right here. Where's the ETH high? Up above us. Naked volume point of control here. Target, target, maybe target. So that's how we put the pieces together. Now, the other part of the exciting part of this is, of course, we don't know how, if, when, where. That is the random nature of the rotations and, how the thing rotates around itself. And the other part about this is the market goes up to go down and it goes down to go up, because the market rotates. And what that means is if the market goes down, you're going to get buy stops above the swings, whatever fractal or time frame you trade. So if it goes down, you got buy stops. If it goes up, you got sell stops in any time frame or fractal. So it isn't being one-dimensional. It's always thinking from multiple angles, because you need to anticipate to participate. And if you have questions in your YouTube, throw them in there. I'll do my best. And thanks again for visiting Trader Lab. By the way, please give a thumb up. We like the thumbs. Hit the like. And let's get going. This is the RTH Open. Now remember, ETH volume point of control is the last retail price. Naked volume point of control was the retail price from yesterday. I'm opening above it. I'm opening above this, and I got targets above. So I'm on the long side, longs only at this point. And the idea is to squeeze out yesterday's shorts. And remember how this works. Market goes up to go down, market goes down to go up. Now, for me, on a long-term basis, I'm not bullish. But as a day trader, I just trade whatever, is there. So let's look. Now, I'm going to be sharing structured trades with you here. These are trades you can download. There's 60 PDFs in a library of webinars. And this is not necessarily where you start. This is something where you've been doing work, research, replays, watching the library of webinars, and investing in your potential career. This is not a quick fix. If you want to be proficient in anything and competitive, because we're in a performance-based environment, you're going to have to put the time in. So there's no shortcut. If there was, we all would sign up for the shortcut. I know I would have. You would too. So, RTH open. This is called developing volume point of control. What this is when the market opens, there's no volume, so it starts counting the volume. The market moves up. So this is the retail price. I have more volume here than I have here. This is the new retail price. So two things can happen here. And I always get a little chuckle when I say this to you. I'm going to say it can go up or down. And I always think if I was listening to this, my eyeballs would roll back in my head. Because this is a retail price. You notice here how it moved up? Well, if this moves up, wouldn't we anticipate maybe this would move up? But what does it do? It goes down. What does that say? Let's talk language. This is a foreign language. I don't use any indicators, so I had to learn to read the language of the participants because I want to be as close as I can to what's happening right here. If I can determine what this means in an interpretive fashion, I might be able to activate on a more timely basis, which means less risk, potentially, easier, less risk, better entries, shorter distance to get risk neutral if you're using a risk management process to get risk neutral, and then shorter distance to targets. So it's all about being timely. So if this is too high, notice how I push away from it. So this is too low. This is too high. Too high. See the structure? I'm not paying that. Remember, shopping. You're out of your mind. Well, this was too low. Now, here's the other thing about this. Now, what is the condition of the market? Let's go back to yesterday. The market's short. If the market is short and you woke up this morning and the market's opening higher and structurally, shorts are in the market and the shorts can get squeezed. What would you do? You have to always think from a couple angles. Well, if I was short holding a position, I'd be looking to cover the darn thing, wouldn't you? Well, if you're going to cover, what do you want to cover on? Isn't it counter rotations? So if I get an opening, you're going to get some covering, and then I get a counter rotation, and I know everything below me is too low, and this is the last retail price, maybe I'm going to use counter rotations to cover. Maybe. So let's see the behavior. So I'm looking for longs, primarily. And it doesn't mean there aren't going to be shorts. You'll see some of those. So let's go take a look. Now, this comes out of left field. I'm not sure what this was, if this was news or anything. I don't think there was any news. We all know about the budget and all of that in the U.S. being passed, so I don't know what that was about. So I saw this, and that was a surprise. My entry for a long structured trade was down here. So I was looking for this for a long. So that, for me, did not set up. Now, let's talk a little bit more. If this, then that. If not, and I get this, then what? Then north. That shows me the potential that the shorts are now saying, I'm out of here. Let's try to see if we get it. Right here, now this is advanced. So depending where you are in Trader Lab in the sense of your own development, you would learn these trades. But when I'm working with newer developing traders, what's more important is not chasing the market around. It's about developing the discipline when not to engage. And if your trade plan says this is where you want to look for a test to engage, this is not your trade. And it doesn't matter if it goes to the moon from here. But let's look at this. This is a structured trade, and I'm going to qualify it as an advanced process because this is a key element. Let's see what it does. So what do I get here? I get a buy sweep. Buy sweep often suggests counter rotation. I get a sell sweep. Sell sweep suggests rotation up. So if I'm looking at this and I see this, I'm suspect right here that we're going to see this. And then I don't know, are we going to take this out or what? I have mid, VWAP, and developing volume point of control, retail price. So subject to your experience, this could be a long or you don't have a trade here. The next part of this is the ETH high has over 90% probability of getting taken out. If you are long here, or if you've gotten along down here, if it got there, this is your first target. Not too shabby. But if it's not your trade, you don't have one. Let's keep going. Now, there's more. This is called VPOC migration. I'm going to label this. And what this is a, it's something I fell over many, many years ago, which is once I understood that this is shopping and it's not some mysterious thing, it's just random. Then once I understood it, I said, well, what does it mean? Isn't that what we want to know? What does it mean? What it means is this might be too low. And now the shoppers are willing to pay this price for the product. Now, again, two things can happen. I can break low, this becomes too high and come back to VWAP and maybe down here, or I can push off it. So let's see what it does. VPOC migration is another structured trade in the Trader Lab. I did a webinar on this process and what this says. This is a buy sweep. There's your counter rotation. What this is telling us in this consolidation is that there's more volume up here than there was down here. Think of it like the store, and they changed the price. Also, I have ETH high. And going a little further, this was our consolidation, and we left it behind. This is a low volume node. Once I break away from it, I start a new auction. And this volume is based on this. Chop, 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 chop. Consolidation. What is a consolidation? It's sellers are here, buyers are down here. If I break away from it, and this is called VPOC migration, you can take a long here or here, right at the top of this structure. Let me try to show it to you. Right in there. So this is an opportunity here, right in here, because there's our breakout, there's our test, your stop will go under here, and then you are going for this as the next target. And yesterday's high. Why? Stops. VPOC migration, another potential long in the Trader Lab. What am I leaning against? Let's come back before we get there. So, long, consolidation, microstructure, high volume structure in a micro. Too low, too high, too low, too high, retail, target, and yesterday's high. Stops, right? This is what sets up the long scenario. Now, we get our next target, VPOC migration. Everything says still heading north. Now there's more, of course. Now this is very interesting. Let me show this one to you. Now first, the other part about this is a target. Now, depending on your individual trade plan, I trade the targets. I don't worry about it. I don't care about it. I just take chunks because I don't know what's going to happen. Do you? So if I don't know what's going to happen, I just trade targets because they have statistics involved. There's over an 80% probability we take out either yesterday's high or low. Considering where we opened in the condition of the market, I would go with yesterday's high. What do you think? So if that's the case, these are my targets. And then whatever happens, happens. VPOC migration, right here. target, then we break low, and we have a report. And everybody does the Acapulco cliff dive, and they wipe everybody out. Now let's come back over here. This is very important what you're going to see next. This is how the auction works. And by the way, if you have questions, please post them over there. One moment, guys. You have a question? I read when POC shifts down, it's more bearish, and VV with up. But I often see that when POC shifts down, then the price goes up. Yeah, they're not. It's not an indicator. It is a measurement of volume, and as it moves around, it just shows us what the perception of developing value is. So here, we'll take a look at this one here. This is a good example of it. So here, the volume point and control shifts up. Well, this is the retail price and going up, right? Yeah, but this is a naked volume point and control. This was too expensive last time we're up here. That's why it's a target. It's a dynamic. When we break low, let's look at the language. We break low. It says at the moment, this is too high. One moment here. I got to get this in here. So variable high volume node, that made the term up, who knows. So too high. And the reason it's too high is because now the high volume is down here. So too high. Now what? Where was that location we were looking for? The ETH volume point of control. Where do we come down to? ETH volume point of control. Method to the madness, right? So what do I know? Let's talk about what we know. What I know, and this is off a report. Couple things. The report is a disruptor. It disrupted the auction. This is where the fair price was. And then we get the report and we leave it. And then the fair price shifts lower here because there's more volume. I test this fair price from the ETH. That was where I was looking, remember, for the long initially off the RTH open. Well, now we're at the level. What does it say? Remember, language. Well, if this is too low, what's the last place that was too high? There. So this sets up a long, potentially, back to here. Why? Retail price. Too high? Well, let's have a new retail price. Well, suppose this one is too low. Might we go back and check what's too high? And what is that? Too high, too low. So here's the scenario. We're in a bullish configuration. We tested our outside level. This has over an 80% probability of getting checked also. You'd have these statistics if you're in TraderLab. This was too high, its resistance. This sets up a long. If you have an entry, and I'm only talking structured trades, I'm not discussing triggers with you today, any of that. I'm just showing you how you can kind of get a sense of what the potential is. And then you have to devise, and you could use examples of this in TraderLab, how to actually enter, where to put your stop, where the obstacles are to get risk neutral, and the targets. This is a target. So this trades from here to here, period. Now, there's another possibility. We got, I believe, yesterday's high. We got this primary target, and the possibility is this is too high, and we're going to come back here. So for me, it's this to this, not the short at this point. I don't turn around that fast, just the way it is. So I just take pieces. And there's nothing wrong with this, you know. It's a 20-point trade. I can live with that. How about you? Tom, did I answer your question there? So This is a potential short. However, and the trade would be from here back to here and potentially out the bottom. That was my thought when I saw this. I did not have a short with that. But I'm saying is that was the possibility. So let's take a look at it. How far does it come? Right there. So, Tom, this is for you. Think about it. Too low, too high, test. So, long, short, long, and then helmet and whatever. Let's watch the behavior. We come under here. Now, right here, as far as I can tell, if I get below this and come out the bottom, and there's over 90% probability we take out either the first hour's high or low, at this point, I'm thinking that now the shorts are going to re-exert themselves because we squeezed out the shorts from yesterday, and that's fine. Now, we have another target. Now, this is not, this is fine. Long, short, to there. And then a runner out the bottom, if that's your plan. And that does not, things change. Now, where does it change? Let's talk about change. This here is a distribution of volume. The outside edge, let me bring it back here just so you can kind of see what it looks like. So we have this edge here outside, and then we have this one out here. So I know that if I come above this low volume area, then I can, let me just get this open a little bit more. Yeah, here. So this is resistance there, and then resistance is out here. So I've got two locations. If I come out past here, which is this, then I can come up here. So it's outside edge, and the idea would be to stay in here and fall out the bottom. Didn't do it. Then come out here, and there's this, it's the same mechanic. Outside edge, come back here, and then maybe fall out the bottom. And then at this point, once we push through all these low volume areas, that says no more shorts. And the shorts in this leg here, their buy stops are here. So there's no shorts now. There's only long continuation trades or nothing, subject to your trades. VPOC migration. Does this look familiar, Tom? Tom, as far as when the POC shifts up, when to expect price to continue, expect is a tough term to use in our business. You really got to look at the behavior and the full picture. This shifting up is saying now there's more volume here than there was down below, and we left this behind. So let's look at this from a few angles. We had this go both ways, So this was too high. We checked it, and now this is too low. So long to there. So too high, too low. All good. Come back here. But what we don't know is it still too low? Now, thinking that the market is long and there's shorts, for me, shorts. Except when we come back across, then the shorts in this leg are on the hook over here. And the highs, the stops over the IB high. Over 90% probability we take out either the first hour's high or low. So once this happened, then it's no shorts, and then it's out the top. And then 56.20 is the next target. Yes. And that 56.20 is this. That's where that came from. Now, if we keep going, we have a lot of stops sitting up here at 42. So this, if we keep going, and there's a chance we might, then up here, this is the next area. But that's because of the fuel. Who's ever offsides in whatever fractal or time frame you trade is always going to be, there's always somebody on the wrong side. So whether it's you're trading these little things, which I don't think anybody should, just an opinion, there's always somebody, there's buy stops up above this swing. There's going to be sell stops under here. You can see we squeeze these sellers over here. See how it works? So we're always going to be squeezing. So you always need to be thinking from both sides. So now we get VPOC migration. This sets up a long continuation trade right here. And why? Think support and resistance. This was too high, and that's why we came down here. If this turns out to be too low, what was too high? This. If I bump it, it's now resistance, and I break above it, and I get VPOC migration right here. That is a long. Resistance becomes support. And then here is the next level. Because what this is a VPOC. This is the point of control in an intermediate time frame. So these points of control are in the developing daily time frame. And as you go up in time frame into the intermediate time frame, this is the same thing, but it's encompassing multiple days. Same thing. So all you got going on here right now, other than rotations, is long, long, long. And where's all our stops sitting? Up here. So this is our next target. And we're current. And if you have questions, and Tom, I hope I answered that for you. Give you an idea. PLC, you know, the thing about trading is it's not mechanical. It's something called contextual. And the context is a number of elements that come together. Who's on the hook? You know, everybody, you know, the market rotates. And as day traders, we're really operating in rotations. And depending on your time frame, the rotations can be very short term. And for me, in the developing daily time frame, there's no time. It's fractal. So the rotations just are independent in the sense that what does it take? Where do the buyers come in? Where do the sellers come in? You know, making a few adjustments here. Hold on. Let me check. I'm making an adjustment here in Investor RT so we can see some more levels on the chart. Okay. You'll see them, they'll show up. So these are high volume nodes. This is like a retail price. Each one of these rotations up here is a distribution of volume. So this is an auction. Right here is the retail price. I always think of these like little stores. When you have a consolidation, it's buyers are here, sellers are here. The fair price in this structure is here. If I break below it, it is now short-term resistance, right here. If you take it from the other angle, the outside edge, let's go over here. Chop, chop, chop. Inside of this chop is the high volume. If this becomes too low and I break out of it, this becomes support right here. And then we can move away from it. Move away from it. Now, if this is too high, I can move away from it and come down here. So part of the, you know, of course, the issue for all of us is what time frame of fractal do we trade in? How do we manage our trades? For me, this is where I'm looking to go. And all that means is I'm either in a position and my stop is pretty far away, or I'm going to be managing much more shorter and just taking, you know, pieces of it. And that is an individual trade plan. I couldn't tell you what's the best, you know, one, because we have traders in Trader Lab who will put a trade on and get in the Barca Lounger. And then we have other traders that are really trading much tighter rotations. A lot of that has to do with metrics, doing the work to know that over time, maybe, even though you will leave dollars on the table on, you know, with trades, which we all do, that over time they extract a higher yield being in for the bigger rotation than they do taking pot shots, you know, trying to be a quote scalper or trading for 5-point, 3-point rotations. I'm going to suspect if you do that you might not have an edge with that, but you have to prove that for yourself. You might be very skilled or develop the skill, and you will, but most don't. It seems what I have found, at least what I found for me, is if my typical risk is around 3 points per contract, that if I'm risking 3, I'm looking to make 10, 15, 20. So I want to be in for the larger rotations. because I take stops, you take stops, we all take stops. So don't you want to get paid for those stops instead of taking a stop, getting a scale, or maybe making 5 points, taking a stop, getting a scale, taking a stop. And in the end, when the dust settles, your broker sends you a gift basket. And what do you have for it? So less trades, more range might work for you. But then again, if you come to Trader Lab, you can talk to other traders who've gone down the same path you have. So remember, this is our target. Questions so far, guys? How are we doing in the Trader Lab, guys? How are we doing in the Discord Trader Lab? You guys have any questions? If not, let's continue along. How are we doing in YouTube? How about a like? Support the channel. There is no cost for this, and there's a link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. There's 60 PDFs of these structured trades you can download and reverse engineer. You know, Tom, you're asking about the point of control. There's a lot of information in these PDFs. They're available in the Bookmap Discord chat, as long as a library of webinars that you can review. I hear an ambulance going by. So these are actual trades that I took, and others are screenshots, and I'm not a vendor, and there's no specific course. The idea of the Trader Lab is traders coming together and leveraging. It takes a lot of work to do data mining and come up with probabilities and to develop new ideas. One thing about trading, there isn't a lot of new ideas in trading. It's all been gone through. So if you're spending your time looking for the needle in the haystack and the holy grail and the secret sauce and the right indicator mix and timeframes, I'm going to suggest that's already been done by everybody who's walked in your shoes, and that might not be the answer. Now, maybe it will be for you, but given the statistics for retail trader outcomes, I would say that is not a high probability. And I'm not saying you can't do it, but there's nothing new. So if there's nothing new, then maybe what is out in the retail space, while it gives all of us intermittent wins, because you don't need anything to have a winner. I mean, if you just, I always think of it like if you had a button and depending on, that was a random generator of buy, sell, you'd still have winning trades. So what does that tell you? We all have winning trades, even if we don't have an edge. So we spend our time trying to make it better. It's very logical. Oh, if I can only make it a little bit better. Boy, I had 3 winners. How can I get 5? Well, that's not what this business is about. It is kind of the what we all kind of gravitate towards because it's logical. But this is not a logical business. This is a business of randomness. The best business model of this is the way casinos operate, because they only control how they play the game, but they don't control the cards or how gamblers play the cards. So they're in a 100% random environment. We're in a 100% random environment. So if we're in a 100% random environment, how are you going to get certainty and confirmation, which is what we all seek? I mean, I'm asking you, if you're listening to this stream, isn't that what we all seek? Certainty, confirmation. That's because we're risk adverse and we're wired to run from the saber-toothed tiger. Works pretty good out in the primal, out on the savannah, but we all crawled out of the primal swamp, and because of natural selection and our ability to eventually run away from danger, we are wired to still avoid danger. So you could have the best process in the world, but if you're not able to execute it, it's going to be because of the interference by your reptilian brain, which is really good, survival of the species, but not so good for trading. So the casinos are not attached to the outcome of any hand, yet we are attached. How do you get control over that? Have you ever thought about it? Have you ever thought about why, in spite of your willpower, you still kind of lose it and you start trading in the middle of nowhere and you're making it up and you're impulsing? You ever wondered about that? Well, we address that in the Trader Lab because it's a common element, because we're wired that way. So don't beat yourself up because you have that problem. Maybe solve the problem. That's the difference. Willpower is not going to solve it because we all have tried to solve it that way. At least I did. I had a rubber band on my wrist that I would snap. Those thick rubber bands, and I thought, oh, behavior modification, that'll do it. So I got a sore wrist. Okay, let's watch. Now, the thing we don't know here, are we done? So for me, the next area to observe is going to be out in here. And it's not a trade recommendation. We are violating some levels. We're back under here, which is not so good. And we have the possibility again now to come out here. Let's see what it does. We have a couple of structured trades. First of all, there's going to be stops under the first hour's high. This is the IB high. And we have our naked volume point of control, which we tested, and yesterday's high. Often what happens is there's going to be stops here. We can test yesterday's high, and we have this area. So we have this area, and we have the low volume node here. The structure this sets up is something called mean reversion. And assuming this is a big, this is a heavy word to use in trading because we can't really assume anything. But if the context is up, then the possibility is to come outside somewhere and then revert and come back here and maybe here or higher, But the first concern in any trade is getting risk neutral. So we want to observe. And what's important again? That the buyers defend yesterday's range, this level, and there's stops under here and this. This is the area we're going to be looking at, and this is not a trade recommendation. So right now, nothing to do, just sit here. And in the meantime, if you guys have questions, why don't you drop them in there, whether in Discord or YouTube. Then I would observe it. The thing I know about this, Ben, is there's going to be, this is the area, but it's not mechanical. The thing about levels, no matter what they are, they're just areas of interest. Then we have to look at order flow, and we need to look at triggering structures. So it's like drilling down. So as we go down in time frame or fractal, I'm going to be zeroing in. So what I know is this, we have a trade called the IB continuation trade. It's a structured trade that I shared in Trader Lab, and it's basically buy this thing. However, it isn't just put an order out there and wait and see what happens. There's also stops here. So it gets really, like all trades, they're only areas of potential behavior. And I know this can be defended. See, the possibilities are we can test into yesterday's range because traders will keep their stops under yesterday's high. Okay? So I know that can happen, and I know. So my area for a long is out here. So that's a pretty big range, right? So I don't have anything to do until I come down into these areas. I also want to look left, and this is pretty important. Where's the last swing? Always look left. Well, the last swing, where the stops are going to be, is around 56.10. Here, out here. And under here is where there's stops. Look left. Let's just go look left and see what we can find. Here. So if anybody is long, chances are they're going to have stops trailing under here. When I look at structure, I also always have to think, now this is VPOC migration, this is important. I also always have to think about where's the fuel. And if I get into the fuel and then it's a grab, then I want to take it as a long. We got to watch this right here, VPOC migration. Tom, you were asking me about VPOC migration, so let's watch. This can be a long right here, but you got to get above this low volume area out here. Tom, you see the VPOC migration? So this is a structured trade. I don't have my alerts turned on for the VPOC, otherwise, because you'd be hearing it, and I don't think you want to be listening to all kinds of computer chatter. So I have them turned off. Otherwise, my investor RT would give me alerts when there's about 500 to 700 contract difference to kind of wake up and smell the coffee and be alert. Because when this shifts, let's go back and look at some other behavior. And Tom, if you're still floating around, yeah, Tom, okay. So the thing about VPOC migration, if it migrates, think of it like shopping. It is saying at the moment, potentially this is too low. I'm going to label it. And I'm still going for those stops. Remember, the fuel, that's up around 56.42. That's what we're trading towards if we get an opportunity. So this VPOC migration sets up the long. So we had two locations. We had down in here, but when this happens, it says this is too low, and now you have a continuation long. Now, the way in Trader Lab I always suggest is that, well, first of all, we got to look at some structure here. Let's come look at some structure. What do we have here? Well, first of all, this, and we want to get risk neutral. That is, it depending on how you enter and where your stop goes. So your stop will be under here. You get long here, or wherever, or here. Stop under here, and your job is to try to get risk neutral. You're hot. Now, this is very funky up here. I mean, look at this rotational stuff. So you want to try to get long, get risk neutral, and then you're looking eventually to come out the top and get into those stops. Now, whether it does it or not is anybody's guess. And it is a guess because there is no ability to predict. What we can do is attempt to align. And then we put our trade on, we take our stop, or we get a scale and take a stop and scratch, or whatever. This is as deep as this is. It's not about being right. It's about waiting for your trade. So let's watch. This, I'm going to show you something right here. This is a trigger, right? There's your expansion. And what is this? You've seen this, if you follow the stream, you've seen this many times. I'm going to draw a little box for you here so you can see structure. And these are not trade recommendations. This is behavioral structure. It's not complicated. If this is where it is too low and the new retail price is here and I break above it, if I come here, you can put a limit order here, and you have to vet this for yourself, and your stop 3 ticks under here. Then your job is to get risk neutral. The highest volume up in here is right there. So I'd be looking, well, first of all, you get long here, whatever your risk is, which is about 3 points, you want to cover your 3 points. So now the worst that happens is you scratch and your broker sends you a coupon to the buffet. This is going to be your next area. So you have this microstructure resistance here, then you have this, and then this one there. So those are our high volume structures. All of those act like resistance because what this is going like too low, too high, too low, too high. In other words, this. Here, let me throw this around here for you. I draw these lines so you can kind of see structure because the auction is really all auction based. I mean, that's what it is. It's all structure. And the structure is created by the buyers and the sellers. So we have resistance there, there, and now this. So if you're managing your trade, subject to the number of contracts, you could start peeling them off, or you just are hanging out and you just let it do its thing. Work on your crochet. That's basically trading. It's not more complicated than that. It is random though. So is it going to take out the high before it takes the stop? No way to know. So that's not your job. Your job is to understand market mechanics, understand the context, which is up, understand that we took a shot on gold to take out the IB low. It failed, which says north, and to understand where the stops are sitting, which is the fuel. So this is our target to get into the fuel. And then it can, since there's 2 days worth of stops up here, if we do get up here, you get a fair amount of acceleration, at least in the stop run. So this is my target, and it doesn't mean it's ever going to get there. It's not a recommendation. So what I do is I just try to position, get risk neutral. If I get taken out, I follow my plan. You get a little gold star for following your plan. And then next trade. Does that make sense? How we doing in YouTube, guys? Getting something from this today? So Ben, yes, I would be looking for the IB high, but it got the VPOC migration superseded it. Now, if we fall under this, then the next support is going to be down here and the IB. So then we're back on that IB trade, Ben, and we'd be back out in here. So we have to see what happens, okay? That makes sense. So let's watch the behavior. There's stops under here. So if you took this trade, you'd be risk neutral. That's the goal. Risk neutral. And then it either goes on or it doesn't. And if it doesn't, you scratch the trade. And that's the end of it. Then you come and you look at the next area, which was, remember, before VPOC migration, we were looking out here. So let's see what it does. We break down below here, then this was the last place. It was too low. Too low, maybe too high. Gets too high, I'm going to check too low. If too low is still too low, then I can go back and check too high. And if I can get through here, I can continue on the merry way. Follow the yellow brick road. How we doing, guys? Don't forget to give a like. Helps the stream. Okay, so this trade would be over. You'd scratch it, or you have a risk management process here. You take a few burgers out, maybe a pizza, and now we're looking out here. Next potential area. And what did we discuss? Outside edge, low volume node, initial balance high, yesterday's high. This is an area. Nothing mechanical in trading, guys. I mean, if it is, fine, come to Trader Lab and show us. But in the meantime, so let's watch. So we have our sellers here. They're being absorbed. 234 buy icebergs. 75 sell stops coming out. Thanks for playing. Now we want to see what happens here. So there's nothing going on here at the moment. Location here. So let's watch. Got to be a little patient. Trading is patience. It is an action. It's patience. And most of us are impatient because of FOMO. Is that you? How do you get, by the way, have you ever thought about FOMO? I mean, how do you manage FOMO? Statistics. So right now, the car's in the garage, and it's just wait. So for me, there's no long here. I just sit back. Now, if you have an edge here, then by all means, but this is, the business of trading is not about making it up and playing a video game. It's really about discipline and knowing where your trades show up. So whatever happens, happens here, but my area of getting involved would be down further. In the meantime, do you guys have any questions? And don't forget to give a like. And also, there's a link in the bottom of YouTube if you're interested in visiting the Bookmap Discord Trader Lab community. Um, there's 60 PDFs of these structured trades you can download and reverse engineer. There's also a library of webinars. You can kind of see this over and over and over again. The thing is, you need to have, in my opinion, an anchored process, just like the casinos have anchored games. They don't change the game. They don't make them up. They just deal the cards. And they're not attached to the outcome like we are. That's why they can pay the gamblers, and they do pay the gamblers, and then they just deal the next hand. How can they do that? Because they rely on statistics and probabilities. They're not attached to the random distribution of outcomes. We are in an environment as close to that as anything else. If you want to think about the business you're attempting to be in, you're attempting to be in the gaming business. If you want to be in the gaming business, take a successful business model, the way casinos operate, and they do pay the gamblers. They even give you the cocktails and the ticket to the buffet, and use that as a model, and then build your business around that business, which is operating in a 100% random environment. Casinos have no control. So if they can't control, how are we going to control? And I can assure you, if they could have figured it out after all this time, they would have. So if they can't, we can't. So then instead of trying to solve for certainty and confirmation, which they haven't been able to do, maybe we got to solve for something else. We need to solve for uncertainty. And the way to do that is with statistics. So where is your trade? My trade, if it sets up, is out in here. I do not have a trade here because this is, for me, is just, and it doesn't matter if we go up from here or whatever we do. There's nothing here for me. So I don't have a trade. I just go, okay, that's nice. Because lots of times the market's just noise and algos and everything else. So it's very important to wait for locations. So, and again, I'm only talking about me, but I'm interested in 10-point, 15, 20-point rotations because that pays for the stops. Playing in this, is just not make any sense for me. Does that make sense? Do you guys have questions? So I don't have anything here. For me, it's further outside, so there's nothing here. I mean, I can read. No, I can read order flow here, but that's not a structured trade. So that doesn't mean anything to me. I do know this is my target up above, if we can come out, but I don't have a location here. Yeah, no. Ryan, I wouldn't get long on the outer edge of the distribution at 11. I would not, because it's not that far out. The LVN is down here, and you got the IB with stops and yesterday's high. So the trade for me is this area, not over here. I wouldn't do that. I mean, you're asking me what I would do, so I just wait for a trade that fits better. That's all. If you look at this pullback to 11 area, the idea of a long from below is mean reversion, but you're buying right in front of the mean. So that doesn't work for me because I need the range. Let's see what we do here. This would have been nice if it was a little further out. No, doesn't fit, so I don't trade it. Remember, the idea of Trader Lab is to help traders develop a trade plan and to develop discipline. So that's why I've shared structured trades. And as most of you know, you've been following the stream. If you actually deploy structured trades and vet them and align over time, you have the opportunity to create sustainability. If you can manage your psychology and also know where your statistical edge is. trading out here would not be a trade I would take. And that's, I should say, what developing traders should not be taking because it didn't come out to location. This would be mean reversion. So Ben, you were asking about this. Yeah, this is all good except for the range. I'm getting a question about our AI. I think that's going to take a long time. Is it going to be, would the artificial intelligence be able to trade and displace humans? Well, not yet. The thing the longs have going for them is this. Well, I like the long idea, but so I have nothing here. There's nothing for me to do with this. Yeah, we didn't get down into these stops, which is pretty potent if you think about it. But I don't believe we got there, right? No, no, we missed them. So for me, I need him to take the stops, which would set up this outside edge. So if I don't get that, I don't take the trade. That's all. Ben, all a variable high volume node is, I made the term up, is it's where the VPOC was. So it's a high volume area. And the HVNs are just high volume in these distributions. So I look at these VPOC locations just as a little more significant. That's all. And then I'm breaking it down into fractals. These HVNs, that's the high volume node there. That's the high volume there. There's another one down here, you see. So it's just kind of slicing and dicing it. Is that a question for me, Joshua? I don't think so. High volume node there. This is resistance at the moment, and that's our targets. What the market tends to do is it tends to move from high volume to high volume to high volume. And if it finds an area that's too high, it's going to come back. You know, like coming back over here, high volume. and then move back to high volume, and then maybe out the top because of that. That's a scenario. There's no other scenario here at the moment except longs and squeeze. By the way, guys, as a reminder, you'll be rolling over, be trading the June contract starting Monday, ESM. So you got to do rollover, guys, and you got to adjust all your levels for the spread between the settlement between the March and the June. Got to do that this weekend. So every level on the micro composites, all of that has to get adjusted by the spread. And you want to confirm your levels. Sometimes they're off just a little bit. You know, about the question about artificial intelligence, they're not quite as smart as you think they are, because they just can't process as much as the human mind. Um, I mean, it's good for like a library or something, but not in this, but not here, not yet. Maybe. I mean, just remember when algos came in, floor traders went away, algos came in, and that was the big deal, right? Well, we're still doing our thing in spite of the algos and everything, and the icebergs and everything else. I mean, even now, if you go out in interworld, there's all the snake oil types that'll give you the AI thing and put up nonsense so that you'll buy their thing, and it's just the latest thing. It's like the hot thing, you know. So that's human nature is to always look for the new thing and think that somehow that we're just going to go out there and buy something and plug it in and have an ATM in the basement. Just doesn't work that way. Also, as technology develops, it kind of neutralizes itself. If you want to consider, I work with guys at hedge funds, and I'm familiar. And these guys have like rocket scientists in there. These guys have been involved in machine learning and, you know, way out there, better than any little thing that a retail trader will ever have access to. You know, we're talking, these are guys that go work for NASA. So that's already out there. And whatever the cutting edge is, it's not in the retail space, I can assure you that. So just keep that in mind. But they're not doing what we do. They're not day trading. They're just doing different, you know, we're in our own little subculture. So we have resistance sitting up here on 22. Let's see what it does here. Market is strong today. It's your first rollover, Ben? Well, The rollover is the difference in the settlement price between the March and the June contract. So whatever levels you have need to be adjusted. And in Bookmap, these are all manually entered. This is my higher time frame. They come off my investor RT. Basically, whatever the spread is, I export this, adjust it, as a CSV file, and just make the adjustment and then import it back in, and they're all adjusted. It's not too hard to do. Oh, I see Rod is here. Not in the Barca Lounger, Rod? Hmm? Well, this is where we're looking. Here and possibly IB high times 2. So 50 is a nice level, 42, 50 up in here. Or wherever. It's not anything more than that. 50, yeah. Would have been nice if this came further out. Oh, that's live. Guys, if you have any further questions, throw them in there. I've got about 5 minutes. If you're visiting in YouTube, there's a link down there if you want to come to Bookmap Discord Trader Lab community. Check it out. It's a great community. It's for serious traders looking to build out the business. There's no shortcut. You're going to have to roll up your sleeves and do a lot of work to actually change the things you have been doing that may have no edge. Remember, random winning has nothing to do with sustainability in the business. Oh, you're welcome. Guys, please give a like. Visit the Trader Lab. There's 60 PDFs of these structured trades you can download. I know I show these every once in a while, but you might find some interest in these. These are just screenshots I took many years ago. This is from 2020 because traders are asking me, what are you doing? And a lot of these are the trades that I share here in the Trader Lab. It's a place where you can kind of look at, get some ideas. Some of these were development ideas. I was working with Bookmap developers back then. Give them some ideas, and we worked on stuff together. Some of them have been incorporated into current add-ons. Others have been thrown out the window, which is normal. This is an actual trade I had on. I was sitting short, watching, of course, the order flow. this bracketing algo, this guy pulls, this one pushes, hit the canopy, blew off right here, the eject button, and the market took off. So it's kind of an interesting, this is how order flow can help you if you're not aware of some of the things you can gain with it. Plus, with order flow, you can actually read the passive and the aggressive side in here, and you can get a sense of, potential. For example, here, we've got buyers here, we got sellers there, and then you break, right here is like a little break. That's potential short, back to here. There's just all kinds of things you can learn. And the thing about it is, it's not seeing the rotations. It's about alignment. So when you put a trade on, you've got the range to get risk neutral. Job number one is the risk management. So down here doesn't qualify for me. Out here, yes. Over there, no. So, and then this is what we're doing. We're going for all this. So everything is working on this trade except it didn't come to the location for the trader, at least based on what we do in TraderLab. Hope you're getting something from this. Please give a like on the way out. I appreciate you guys visiting today. Remember, rollover. So do your roll and hit the like on the way out. And I look forward to seeing you guys on Monday. Have a good weekend, everybody. And if you're interested in TraderLab, use the link in the bottom of YouTube. There's a terrific library in there. Also, the TraderLab community, which is a serious community. It's not romper room. This is the kind of thing that's going on in here. Just a lot of posts, a lot of great information, a lot of sharing. And the library of webinars. And I always say there's a couple here you might want to start with. The primer webinar gives you a high-level overview of what I'm doing over here and what I've shared. It talks about really the concepts that you see here every day in the stream. Also, this one, I planned, I saw, I traded, which I just did recently, is a really good overview of the whole process. You might want to take advantage of that. Are you a trader or a gambler? Why most traders using indicators fail? Are you trapped in trader Groundhog Day? That's all. This is really based on my experience doing this 45 years. Trader Groundhog Day is when you have winning trades and you try to make it better. Logical. But if you don't have an edge, even though you have winning trades, you're still not going to have sustainability. You might want to watch those. There's no cost for that. And you'll come away. The worst that can happen is you'll know more than you do today. Please give the like. Thanks again for visiting TraderLab. Look forward to seeing you next week.